Good day, traders. The 4-step method to high performance trading is a free course download for increasing your competence in your ability to execute your trading edge in live time. The link for the download is in the description box below. And the free audio program, the 7-step daily routine for high performance traders, is also a free download to develop your discipline, your confidence, and a winning mindset to master the markets. Again, the download for these links is in the description box. They're both free downloads. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. Today we're going to be going through some really simple instructions about my approach to the markets, hopefully to answer a lot of questions that repeat and to clarify some things and just break things down as simple as possible to have a couple of understandings. Number one is that this is my approach to the market each week, and that it's simple and reproducible, which means I can keep doing the same thing each day, each week, and each month. And that reproducibility in my process is what allows me to keep hunting out best trade setups. So we're stalking parabolic opportunities, and there's been a lot of questions regarding the day counts, and I keep repeating that Monday's day 1, Tuesday's day 2, Wednesday is day 3. Mondays are opening range, Tuesdays are day 2, Wednesdays are midpoint range of the week, and Thursday is our new day 2 in a day 1, day 2 heading into Friday, day 3, which is our closing range of the week. Monday is our opening range for a new week. Wednesday is the midpoint range of the week, and Friday is the closing range of the week in a Monday to Friday template. We'll walk through some different pairs, some different instruments, and we're just specifically just going to look at the Monday to Friday on every pair. We're not concerned about anything else other than just looking at the weeks and how they've traded, and maybe that will help some traders understand the other opportunities that come. But number one, we're just specifically talking about Monday, Tuesday, Wednesday, Thursday, Friday. Now remember, my approach is to come to the market and trade that US session and occasionally the Asian session when I can identify a parabolic trade setup, whether it's pump and dump, dump and pump. We're going to go more specifically into that, but I'm just talking about Monday to Wednesday, Wednesday to Friday templates. So we're looking at the Swiss franc. We have Mondays our opening range, Wednesdays our midpoint range of the week, and Friday is our closing range of the week. This is an example of a pump and dump template. Now, day 1, day 2, day 3, first red day, a parabolic move beginning in Asia that blows off in the London session, Europe-London window, and reverses in the US window. And we'll talk more specifically in this video about levels, but right now we're just talking about the macro picture. We're not concerned about any major red news. We're not looking at anything other than the larger templates so traders can understand Monday, Wednesday, Friday, that each week, regardless of how many days of breakout traders are in the market, regardless of other day counts, regardless of little 1-bar wick 3 pushes and all these other things, we're just looking at the larger template. And remember, this template in my window of trading time, so for example, if I'm looking for an Asian parabolic or a US session reversal parabolic or trend trade, then you can recognize that there may have been a trend trade opportunity on the Wednesday and a trend trade reversal opportunity first red day in Asia, depending on the window and the timing for traders for Asia and the Europe Open. Of course, there was reversal in the US session, so we're not talking about news or anything else. I just want to paint the picture of templates. So if we go back to the previous week again, we can just follow that same process. Monday, Tuesday, Wednesday. Monday is the opening range of the week. Tuesday's our day 2. Wednesday, day 3, we had the Fed on this particular week. And then we had a vertical move on Thursday and a continuation trade on Friday. We're just continuing that move. But talking about the template, this is an example of day 1, day 2, day 3. Reset begins our new day 1, day 2, day 3 in a trending market. We won't even worry about talking about rectangles and geometrical structures for measured moves, but we will talk about that later. Again, study the templates. Just understand that each week a new template starts, as we have at the beginning of a month, beginning of a week, and the beginning of the day. But I'm targeting other time frame trader opportunities in the session that I'm trading. So if I'm trying to find a parabolic opportunity This instrument itself may not have given me a best trade candidate. So that's another thing to process, is that you're not trying to curve fit and trade a market all the time in terms of getting a direction in any session. I'm talking about identifying parabolic setups on any instrument when I come to the screen for the US session, or on the backside or front side of the move in the Asian window. We'll look at any instrument. This is the US Canadian dollar 1 hour last week. And again, the timing of these templates within the month itself, week 1, week 2, week 3, week 4, can be affected as can having major red news on the calendar. So we will remove everything again and just look at the big picture of a Monday opening range, Wednesday midpoint range, resetting day 1, day 2, day 3 into the closing range of the week. We have our opening range, we have our closing range, day 1, day 2, day 3, resetting into day 1, day 2, day 3. An example of a dump and pump from the high of the week on our day 3 into the low of the week on our day 3, which Wednesday resets again for a vertical parabolic move on major red news from the Canadian dollar. A short squeeze opportunity, but a dump and pump template. So we'll just draw this across. Again, higher highs on the inside, but we'll talk about that more in depth. We'll talk about levels, but this template is something that we've gone over several times before. Different variations can be this HOD can be something we're going to talk about levels in a moment, but again, an example of a dump and pump template, just a different variation. And also the pump and dump template, again, just another variation. The LOD can be substituted. We're going to talk about that because this is where I think traders are getting trapped. We're going to go more in depth into levels and then understanding the template and whether or not you have a pump and dump behavior of price setup or a dump and pump, aligning that with our bigger macro thesis, day 1, day 2, day 3, and then understanding how price should behave if we are in that opportunity, whether it's a nail and bail or a measured move opportunity for a range expansion. Challenge you to, on your own time, go through your templates on the charts that you're trading and just walk through the process Monday, Tuesday, Wednesday, Thursday, Friday, and understand day 1, day 2, day 3, day 1, day 2, day 3. And I want to point out too, just clarify this, that the pound may move better during London on 1 or 2 particular days of the week for a parabolic move, but it may also give me one great trade in the US session in the whole week, which is why I'm going through the basket of instruments each day, just scanning through 10 to 15 instruments, looking for what is potentially set up on the day that I'm trading, and then either front side, back side. So I get that question a lot. To clarify, if we're going down, for example, day 1, day 2, day 3, first green day, now we're on the backside, front side of the move going down, backside going up. Monday is our opening range. We'll get rid of this again. I don't even want to talk about levels yet. We'll talk about that in a moment. I just want traders to understand dump and pump or pump and dump type of weekly template. So I feel that many traders are getting caught in the minutia, and when I show you the levels and then the timings, hopefully you can glue this together a little bit better and understand that you can have 3-day setups. You can have 3 days of breakout traders in the market to help you identify a potential reversal opportunity setting up, not just to all of a sudden blindly counter trend a market. Remember, hunting the setups and allowing the other time frames. So this is a 1 hour chart. So I'm allowing the other time frames, day 1, day 2, day 3, to potentially build order flow and offer me an opportunity. Sometimes because of news, as we have this weekend on-farm payrolls weekend, we have major red news in the U.S. session every single day this week, and we have late news also, which can affect the market. And heading into a non-farm payrolls Friday, they may be trapping volume and just giving poor quality type of movement because they're trying to get traders into the market. They're trying to trap traders who are in the market from getting out of the market, if they're trading longer time frames, that type of scenario. But understanding just the larger picture, the templates, Monday, Tuesday, Wednesday, opening range, midpoint range, Wednesday, Thursday, Friday, closing range, high and low of the week. You can look at any instrument, and guess what? Monday is Monday, Wednesday is Wednesday, and Friday is Friday. You can argue with people. You can say it's too confusing. You can say all these things, but Monday's going to be Monday, Wednesday's going to be Wednesday, Friday's going to be Friday. So again, it's reproducible. It's not discretionary. It's a hardened fact. And I like to be able to take things that are concrete in my process into an uncertain environment. So I want to create as much certainty in an uncertain environment as I can. Day 1, our opening range. Day 2, Wednesday's our midpoint range. Thursday, and then Friday is our closing range. Day 1, day 2, day 3, heading into our close of the week. We can get really tricky and talk about 50% of price and time. If we took Wednesday in a new reset, because Wednesday is a reset and it's continued to go. So if we wanted to get really technical and confuse people even more, we could look at this again as a trend trade with a measured move range expansion. Day 1, day 2, day 3 heading into our closing range. But we're just talking about templates. The reason why I point that out is because retail traders are obsessed with counter trending all the time because they are at the high or the low. They think because a market's at the high, they need to counter trend it. They think because the market's at the low, they need to counter trend it. And that's why traders get smashed. That's why their accounts get blown up. And also the timing of when this happens in terms of week 1, week 2, week 3, week 4, new month, new week, week 1, week 2, week 3, week 4. We can be, again, the beginning of a month, the closing price of a month. We're going to talk about levels in a moment, but I really want to keep hammering home the templates. We can go to the previous week. I'll just bring this up. So I'm just reinforcing some simple concepts, learning to sit on your hands and know what a best trade candidate is, and not just trying to trade every day and get moves and get pips. Where can I size in? Where can I put size into the market when I'm going to get a parabolic opportunity that's being driven by other time frame traders? So that, repeat that question. What are other time frame traders? Well, obviously we have anytime weekly high is broken. We have everybody in the market, in most cases, daily, 4 hour, hourly. Obviously shorter time frames, 15 minute, 5 minute, 1 minute, whatever. We're going to talk about levels in a moment, but I really want to emphasize that when we get a large move, and again, major red news can affect this. This was the Fed, but we have a pump and dump template. When we have a market that we can potentially identify the larger macro template, we can then be building a thesis and hunting out in the session that we're trading when we may get a parabolic opportunity. We may not. So traders get fixated on trading one market, and every single day they want to trade it, and they may have a low probability market on a parabolic day 3, what we call Free Cash Friday, but we're not actually trading a parabolic template if they're trying to trade gold all the time. They're in a market that's just gone into a trading range inside of previous day's levels. So we have day 1, day 2, day 3, and all this market has done is close back where it opened, pretty much, at the beginning of the week. We'll just bring that across. Gone into a narrow range and closed pretty much where the previous Friday closed. Again, the importance of understanding closing price. So the big question that answers for me is, what type of weekly template am I in on any particular instrument? Doesn't matter what I can bring up. I might be looking at US dollar crosses. I might be looking at Asian crosses for the Asian session. Aussie dollar, New Zealand yen, Aussie yen, New Zealand yen, Euro Oz, Pound Oz, Euro yen, Pound yen. And then, and gold perhaps in Asia as well, because we'll often get a day 1, day 2, day 3, maybe a consolidation or an inside day on Thursday, and a parabolic move on Friday. It's non-farm payrolls. I'm pretty sure we're going to get one either in Asia or London. I'm one of those pairs, and that's the thing to understand with me. I'm looking for 1 or 2 over the course of the week on any instrument. Now, typically, there's going to be other 3 session setups over the bigger template each day on indexes, gold, oil. But understanding the larger template And then the levels and how price behaves, which we're going to talk about in a second, is the main driver for either joining in with an existing template move for a day 3 blow off or a day 3 reversal like we saw in the Canadian dollar, a short squeeze, that type of situation, understanding whether we're at the high or low of a week, whether price is going to continue after a breakout and a pullback to continue going higher or lower, whatever that opportunity may be. But the weekly template, powerful. I repeat this over and over again. I get people telling me that I contradict myself, that it doesn't make sense. Well, I'm going to suggest that Monday's Monday, Tuesday's Tuesday, Wednesday's Wednesday, Thursday's Thursday, and Friday is Friday. And that keeps it really simple. Now, 3-day setups and 3 days of breakout traders in the market are 2 other specific opportunities, but they still fit into Monday to Friday template. Study those. Take everything off your charts and just look at Monday to Friday and understand there is a template there to be studied. Now, I could spend 3 more hours and walk through every single instrument and map out Monday, Wednesday, Friday, but you can also do that. This is just having period separators on your charts. Monday, Wednesday, Friday, DJ30. Just an example again of a day 1, day 2, day 3, and a day 1, day 2, day 3 to the high of the midpoint range of the week for a parabolic move after major red news on Free Cash Friday. So we'll talk about levels in a moment, but I want you to go through and understand that there's a template Monday to Friday. Those templates are all going to vary depending on the type of movement that instrument has going on for that month. We'll talk about levels of months as well. But 3-day cycles, day 1, day 2, day 3. Wednesday resets, day 1, day 2, day 3, into the closing range of the week. We won't talk about 3 days of breakout traders in the markets. First green day. And traders get stuck on first green day saying, yeah, but it was a first green day, and they miss the parabolic opportunity because they don't understand the templates. Day 1, day 2, day 3 into our closing range of the week. What time is it? What level are we at? How is price behaving? Pump, 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 parabolic dump on Free Cash Friday. Now, for me, I talk about specific timing. This is the times that I will trade. I'm not trading London currently. It's in the middle of the night for me, and I don't want to there's no need for me to do that. There are plenty of great best trade setups in New York and 1 or 2 parabolic opportunities in Asia. Really, realistically, are all you really need to trade in the whole week itself. If you're trading large enough, it's, for me, the big thing to understand is I'm looking for scalable opportunities because I want to focus on being in that trade in that hour window with size and being done and walking away. I don't hold on to something for 3 sessions or 3 days. I'm looking for the trade in that session to be able to size into the market if it's a parabolic opportunity, 5-star, or take a trade for a parabolic move, nail and bail. There might be a 2nd hour or a 3rd hour trade depending on the instruments and the setups and the calendar. If there is major red news scheduled, Forex Factory, you can use any news release site. I wait until after the news. We're not going to talk about first bounce catalysts, first bar trades, any of that. We're just specifically talking about the larger macro templates, understanding the opportunities, and then the specific timing window. So we repeat this, Asia 8 p.m. to 11 p.m. Now, specifically, often we'll find that middle hour will be when we see these markets turn. Now, if it is a day 3 parabolic or a continuation trade after a large move, after Fed day, whatever, Asia can move in that first hour. We can see three levels of drop or pump from the U.S. session, coinciding with a parabolic opportunity that can often begin in that first hour, but typically we'll see 30 to 45 minutes of them locking in a higher or low or consolidating for the parabolic trade. London, open 2 a.m., Europe open, Frankfurt, but the equity markets in London specifically 3 a.m., 3:30 a.m., we will see that middle hour for London be the most consistent and powerful time. Now, I come to the screen. It's about how is price behaving? Is there any news on the calendar? Which is why I know that first hour, if it's already moving, if it's dumping before a session begins or pumping before a session begins, I already know they're getting traders to chase that move in that first hour. So we're going to talk again about levels in a moment, but I just want to specifically hit the timings first. So some traders want to know when they can trade in the gap time. They want to know what New York's like in the afternoon, all those things. I don't focus on that. I'm looking for the setups right in my timing window. But when we go through levels, you'll understand how timings, if you can only trade at certain times, how the levels will tune you in if you are only able to trade at other times, scrolling through instruments that are set up from the levels for a trade opportunity, because there are other opportunities that traders can take. Often when it moves later in the day, there's a reason why, or it moves later in a session, there's a reason why. They're building it up for a larger move potentially the next day. But there's still opportunities for traders to hit that. But understanding that if there's major red news scheduled in the U.S. session as we have this week, I will wait until after the news. Now, occasionally there are trades, 10 a.m. New York. We can get a first hour trade sometimes on gold, or it's already running. We can be in a move reversing from the low of the week in oil. Oil we'll see often move at 9 o'clock or begin a move at 9 o'clock, but the levels are the most important thing, and we'll talk about that in a moment. This is my timing window. This is when I'm looking for the best opportunities from 8 p.m. onwards, specifically looking when it gets or how it behaves at or near a level. London, 3 to 4 a.m. And on the odd occasion, we'll see a first hour move. Then we can also see a 1 hour, 2 hour, 3 hour drive that doesn't really go anywhere for a move that happens in the gap time. Pump, 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 trapping traders up higher, down low. We see that move go vertical heading into the U.S. window sometimes, depending on the pairs and the instruments. And then New York, 9:30 is the equity market opening time, and we see a lot of explosive movement on obviously the indexes, but we will see markets move in that New York Open, especially euro pairs, maybe Canadian dollar pairs. Depending on how the other instruments have set up, sometimes one of the US dollar crosses will move in that 9:30 window, or dumping down into that for the pump after the New York Open, and vice versa for the pump and dump. But if there's major red news scheduled, I wait until after the news is released. If there's no news scheduled, which is why I look for parabolics on the back sides of moves and on the front side in Asia, is because typically if there's no news, that can be on the front side of a day 1, day 2, day 3 pump, or a blow off on a day 3, or a blow off on a day 3 dump, for easy, free cash, parabolic trade opportunities. Remember, I could just be happy with an instrument giving me one 5-star setup in a whole week. That's all I'm looking for, is for an instrument to give me one 5-star setup, and there are often 3 to 4 of those a week if you have a basket that you can selectively filter through and you understand the larger templates. And then we'll speak about the levels in a moment. And I just want to repeat, this can't be argued about. These times are specific. They're going to happen tomorrow. The same times, the same windows, the same opportunities, as is Monday, Tuesday, Wednesday, Thursday, Friday. So often we find traders like to argue or, question everything. Well, so far the process for me is rock solid. This is what I like about it. It's reproducible, it's consistent, and it's going to happen again, again, and again. The next thing we're going to discuss are levels. And I repeat this quote to everybody consistently because it's the same thing over and over again. Always think of your entry point as last night's close. Paul Tudor Jones. Now, traders need to understand something wherever they get into a market, whatever time they're going to trade or take a trade or catch some pips or grab a move or whatever they're doing, is that if you understand that somebody's last night's close, somebody's probably short, somebody's probably long. And what you want to be asking yourself in reference to that is, if you were short and the market is going up or you're buying above the close, that trader's losing money, perhaps if they got short at the closing price or near, if they're trading longer time frames, 4-hour daily, all that sort of stuff. And you're going long and the price is going up above the close, then perhaps you're getting caught up high, or you're actually in the right direction. You're making money. Depends on what time it is. But we're going to show you some really specific examples, because we're talking about pump and dump and pump opportunities, the importance of levels. But I didn't talk about the closing price, but I'm going to use that consistently, and I'm going to show traders why. There are 3 pieces of information that the market gives every single trader every single day. Again, that is not disputable. We're not going to use stuff that's discretionary. We're going to talk about reproducibility of concrete hard facts. So far, we've talked about a Monday to Friday template. So there's some traders out there who are confused about that. And I'm going to, again, just encourage you to go and study your templates and understand that there's a higher order to what's happening Monday to Friday template. Then where he talked about the timings are going to be the same over and over and over again. And then now we're going to be talking about levels, and the levels that I'm going to show you are going to be used every single day, and the market gives them to us voluntarily. And we have that information. It's concrete. Now, everybody has this information. Yesterday's high, yesterday's low, HOD, LOD, high of day, low of day, yesterday's closing price. I use New York closing charts, 5 p.m. That closing price when the day rolls over is my closing price level. I know there are traders who use midnight. There are traders who use London, whatever. I'm telling you, this is what I use. If you want to use other times, go ahead. But this is the levels that I'm specifically going to show you. And then we're going to talk about behavior of price. Timings, levels, behavior of price. So this information, again, we can't argue about it. It's not discretionary. It's not arbitrary. It is fact. The market gives us those levels every single day. Let's take a look. Before we do that, though, I want to just address a lot of traders have asked me, they don't understand. I keep referring to everything as the matrix. And I joked saying that we have new glasses for sale to help traders see through all the bullshit and the lies, the ones that they've trained themselves to believe, the ones that they're being taught by gurus, and they aren't seeing the market for what it is. Timings, levels, behavior of price. They're learning all this other, what I consider to be BS. And so hopefully today it will deflate that. And some traders who feel ingrained that they know a lot about the markets are going to be shocked, because they're actually buying into the matrix. They're trying to learn how to trade the matrix. And as I said, you can learn to trade the matrix. It's 50-50, but it's designed to slowly drain your trading account and your mental capital. Whereas if you learn to hunt parabolic best trade setup candidates and then know how to trade those setups in live time, how price should behave, where your profit potential may lie on any given day within that template, the larger macro template, these levels will help you identify that. So hopefully you can see through the matrix. Now, before we just look at the charts, I want to explain some things that traders need to get past. So we can have a level in place that could be, for example, this could be our high of day. This could be our high of day first. And we see the market come up to that level and it's trading around here, but we're not at our opportunity time yet. We're just not 9:30 or London hour, middle hour in Asia, whatever that may be. And so traders immediately, though, think because we're at the high of the day that this market needs to be sold. And they're too early, or they're before the New York Open, and they sell it, and the market drops down and then starts to pump up just into the beginning of the New York Open. The New York Open might actually be the pump. It breaks down, and towards the end of the hour, as we start our third hour, the market may go parabolic. Trader gets in early, they get stopped out, and they say, well, it was at the high of the day, I had 3 peaks, all that sort of stuff. That means nothing. What the important thing is timings. When did New York open? How did price behave when it got there? We're going to talk about specific behavior in a moment, but I just want to address levels for a second. We could have a market that goes up and it's out here and it's day 2 or day 3 and traders they're looking for the sell because the market is now out of balance. Remember, we talk about a market that breaks out. Dalton market profile, it is out of balance. And they sell this market down. It's a creeping trend. New York opens and goes parabolic for the low-hanging fruit continuation. The high of the day in this particular case is the level where the trade took place. The levels are where the trades take place. Traders are obsessed with counter trending. They miss the parabolic opportunity. They sell it somewhere in here. They are holding on. They're up 20 pips, whatever. The market opens up in New York at 9:30 and goes 75 or 100. Depending on the instrument, might go 50. This might be a 15 pip range or a 20 pip range. It goes 50 pips vertical when New York opens off of the level. I am not counting little pushes and bars and everything else. This is what I'm looking at, the level. This could be our low of day, and we have a market that's broken out. First hour puts in a high and begins to pump up in that second hour, and New York opens and goes parabolic through the low of the day. We redraw our levels. Now the level itself acts as a selling point for a low-hanging fruit trend continuation, even though it's the low of the day. Traders, again, are obsessed because it's down low. We could be in a larger template, day 1, day 2, day 3, and they think they want to buy that because it's day 3, because it's broken out of the low of the day, the low of the week. And again, the timing window. They're not paying attention that this is actually a pump and dump template. Depending on the instrument, this might be a 25 pip box. It might be a 100 pip box if it's gold, oil, or an index. But the timings are key. How does price behave when it gets to the level? This could be our low of day, and we have a market that's broken out. First hour puts in a high and begins to pump up in that second hour, and New York opens and goes parabolic through the low of the day. We redraw our levels. Now the level itself acts as a selling point for a low-hanging fruit trend continuation, even though it's the low of the day. Traders, again, are obsessed because it's down low. We could be in a larger template, day 1, day 2, day 3, and they think they want to buy that because it's day 3, because it's broken out of the low of the day, the low of the week. And again, the timing window. They're not paying attention that this is actually a pump and dump template. Depending on the instrument, this might be a 25 pip box. It might be a 100 pip box if it's gold, oil, or an index. But the timings are key. How does price behave when it gets to the level? We could have a market that on a day 3, so some traders have said, I don't understand the relevance of closing price. I don't understand that at all. And I talked about specifically looking for day 3 opportunities. We could see price moving down day 1, day 2, day 3 closes. And the next day we get Asia and we head into the Europe Open. And the closing price level acts as a level of support of when the Europe or the London session begins. It might be a creeper down into that low at the London Open, at the level. Levels, levels, levels. Traders are studying all the little zigzags and bars and all that stuff and pushes and drawing lines in the gaps and everything else, and they miss the fact that the market has given us the levels of where the trades will take place if the market is set up on that instrument for a best trade candidate. So this will ruffle a few feathers, but this is the red pill, blue pill moment. My focus is identifying parabolic opportunities, and I've been using this phrase that we saw in Donnie Brasco's movie, and other traders have mentioned it to me, and I believe it. I believe that everything you're looking at, you think you're seeing on the chart inside is a fugazi. It's make-believe. It's fake. It's BS. They're engineering a chart. The price action is designed to fool you, to get you into the market, to chase moves. And Furus are teaching you how to trade the matrix. They don't even realize that that's all make-believe. It's again, I'm talking about how to identify parabolic trade opportunities, but the matrix is all the chop and the mess and pushes. And if you want reproducibility, again, go back to the first things we talked about: Monday, Tuesday, Wednesday, Thursday, Friday, timings and levels, and understanding the type of template you're in, whether it's a pump and dump or a dump and pump, and whether it's nail and bail if you want to sit there for a few more hours to trade the larger time frame move on a day 3 or whatever, that's fine. I'm just talking about identifying the parabolic opportunities, and that the price action around during the day is designed and manufactured for trapping traders either up high, down low, or getting them into the market in a market that may not go anywhere. And that's why it's important to be tracking a basket of instruments, preferably ones that are definitely going to be moving or potentially moving at least once or twice high probability in the session that you're trading in that week. There's trades every day, but if you have the basket as opposed to just trying to trade one instrument every day, unless you're really good and the levels are there every day on certain instruments, we know that the volatility will offer them opportunities. But I want to hammer this home. If you're trying to learn to trade all these little bars and movements and levels and gaps and all these other things, understand that the large majority of that and a high percentage of cases on any given day is all make-believe. And when the market opens, they will explode to one side for either a liquidity hunt, to trigger breakout traders into the market, to trap volume, to hit stops, whatever that may be. The timing of when that happens, the mechanism, if it's done on news, all of those things are manufactured to either get you into the market chasing the speed and momentum of an explosive move, maybe in the wrong direction, and then it fades and drops. Lift the offers, pull the bids. Elevator, escalator. Escalator, elevator. Understand that. Understand that most of this price action is designed just to fool you. It is not what you think it is. If we went back and looked at the DJ30, for example, and revisit our previous template that we looked at, we had the Monday, Wednesday, Friday template. Now we have our high of day, low of day, and closing price levels on each one of those days. So we'll zoom in now on a smaller time frame to look at specifically the New York session for this particular instrument. It's the DJ30. It's a U.S. index. Now we have our low of day and Friday's closing price level. And again, we're talking about the New York session. We see that the market just prior to the U.S. window opening, our 8 to 11 a.m. window, the market opens down low. At 9:30, we have the market trading into our low of the day. So we redraw our levels. But do you understand, we're not at a level. We're not at a level, and traders are being forced to buy in a market that is moving down. So if traders were going to take this and we don't have a level to trade off of, the only level that they would be identifying would be a high of session level, which, again, you're selling down low. This is not a best trade candidate. We are not at a level specifically on this instrument on Monday, day one. But we have shorts in the market. We've broken out. The market closes after triggering shorts. We're on day two. We come into our New York window, though, and on day two, Tuesday, now day two, Tuesday, we're at the low of the day, and an example, again, of traders looking to counter-trend this market. But in this particular section, all I want to emphasize is that the trades come off the levels. We have a market that, after major red news, pins up at the level for the low-hanging fruit continuation on day two. So for traders who are going to be confused, you need to go back and understand studying behavior of price. 1 push, 2 push, 3 pushes. The high of the day is locked in, but we're trading at the level in a market that is on day two now. Day one, day two. For the short trade, there's our 1 bar stop, our 5-minute chart. The market is already locked in our high, our pump and dump template at the level. Now, again, I'm not suggesting that there wasn't a better candidate, but I'm telling you to go and study the levels. The levels are there every single day for best trade candidate opportunities, which brings us to Free Cash Wednesday. The previous week, we are at the high of the day inside of the box, inside of our previous day's high and low when the window opens. Our New York market opens. We had an engulfment. This is an example of first bar trade again, similar to news candle, at an explosive trap up top, trapping all the volume, and then a pin hammer at the level, previous day's closing price. For again, day 3, continuation trade blowing off in the direction of day 1, day 2, day 3. From the level, closing price, a 1 bar stop for the continuation trade, making lower lows. Which brings us to Thursday. Previous Thursday, we're now below closing price. We'll zoom out here, and again, you can put these on your chart. This is a free download, by the way. Prior day's open and close, or closing price level. For MT4, it's a free download. All the indicators I use are free. The only one that I cannot unlock and share is the high of day, low of day for some particular reason. But emphasizing the levels. New York opens and trades to the low of the day, 15 minutes, false move before going vertical off the low of the day, trading up into the closing price level, breaking higher highs for the dump and pump in the third hour from the level. Remember, higher high dumping before a session begins, breaking structure on the inside from the level, closing price level for a measured move range expansion. Now, when we just put price on a chart, this is what we see. Instead of having all the price action everywhere, we can now look at our Monday, Wednesday, Friday template and be looking for parabolic opportunities based on that template in the session that we're trading. So there are going to be days where closing price is inside of the high and the low, halfway, almost exactly halfway. If we take our range expansion tool, you'll notice that it's right at 50% level. Do you think that that's by accident? Do you think that's a coincidence? And then we'll see a lower close, but we're still inside of the high and the low. We haven't broken out. We're sort of inside of the high and low of the closing range of the week. Now, if we project that across, do you notice how we get a higher close on day 3? And then how the low of the day may have offered traders an opportunity, or the high of the day in the U.S. session. Closing price was down low on Free Cash Friday. The market went parabolic back up. Now we'll take a look at this on our normal chart. We see again day 1, day 2, day 3 goes parabolic. It's our new high and low heading into our closing range of the week. We get a failed breakout that gives us our first red day. Again, pay attention particularly to the levels. Remember, we said that was 50% on Friday. Friday's close was 50% of the high-low. We project that across, and we see that the market closed on top of the closing price after it pinned down into it. Day 1, day 2, first green day, higher close. Put that on there. And we get a parabolic high of day collapse on Free Cash Friday from our first red day setup. Day 1, day 2, day 3, day 1, day 2, day 3. Now, there were opportunities on 2 or 3 of these days for high quality, high probability, 90-10 opportunities for best trade candidates. But when you understand the importance of these levels when you're trading the session timing window, regardless if you want to trade in the gap, if you want to trade in Asia, if you want to trade in London, these levels are what's important to understand. That is where the market will give us our best opportunity for free cash. You can go through your charts. You can do your own homework. It's so important that you understand not only the template, the timings, the setups. Today was an example on oil of a couple of very important lessons for traders to grasp. Number 1, we don't just blindly try to buy something at the bottom because we're on day 3, hoping that we get an explosion out of nowhere that's going to go all the way back up to the high of Thursday on a dump and pump template. That's not what's happening here. We have a market that has gotten to a level. on day 3. And you'll notice we're below Friday's closing price now. Monday broke down. That was a neckline, a death line. Everything above that was trapped if the market collapsed and fell away on Monday. Understand that. So always look at a chart and say, where is volume being collected? We're underneath of the closing price of Friday, from Thursday, which projects across as a level. They trap volume above the closing price level, and the market does a range expansion on Monday. We have shorts in the market on Friday, first red day. Shorts are in the market. Who's driving the market? What time frame are we on? We're on the 1 hour chart. This market is now day 1, day 2. Peak formation high. People keep saying, oh, it's gap times and this, it's too confusing. No, it's a high and a low and a consolidation heading into day 3. Peak formation, consolidation that goes below Monday's closing price level. Do you think that would have some significance? Because now this trader, if they're short, is back in the money. If they were short and they were holding this because their stops or their liquidation points were above the previous day's high, large stops obviously, or if they're positioning themselves in the market underneath here, again, Al Brooks H1, a large bull candle, is an opportunity on a longer time frame for looking for a re-entry into an existing move. This isn't the London session. We get down to the low of the day now. Traders want to buy the low just out of nowhere and hope that it's going to go the other way. It's day 1, day 2, day 3, potentially blowing off in the direction of the trend. We are out of balance now. We're in a market that is out of balance. We're below the low of the day, and traders are looking to counter trend this. They want to buy and go against a falling knife. We don't have a short squeeze. We're on day 3, day 1, day 2, day 3. First hour puts a low in place. We redraw the low of the day. New York opens. We have climbed 3 levels of rise, 25, 25, and 25 into the low of day level. Remember, levels doesn't matter. Level is the important part. We get a pin hammer engulfment of the high bull. 1 push, 2 push, 3 push at the level. New York open for the parabolic continuation. We can project a range expansion just of session high and lows, and the market has just done a 300% expansion of that range on day 3. Free Cash Wednesday, day 3, parabolic moves can either reverse or blow off in the direction of the trend. There's no witchcraft. There's no hope mode. Day 1, day 2, day 3, Monday, Tuesday, Wednesday. 9:30, New York Open. Hunt out the best instruments. Know exactly how you're going to trade them. What is the setup? Is it a pump and a dump in a falling market, or is it a dump and pump for a parabolic reversal or parabolic continuation trade? 2 types of trades: parabolic reversals, parabolic continuation trades. Free Cash Wednesday on West Texas Oil. Now, I want to repeat, every trader has this information. So it's fact. It is what it is. We can use this over and over again. You can screenshot this. You can review this video. But it's so critical to understand that the Fugazi is all the other garbage. It's all the other fictitious stuff. I'm looking for pump and dumps, dump and pumps. Specific time at those levels. Timings, levels, behavior of price. We've talked about edge and preparation, understanding I'm not trying to get a direction right and hold on to something. I'm looking for where a parabolic opportunity is going to present. I might wait all week for one great trade on a Thursday in Asia or a U.S. session on Friday. I might be taking other session trades and just nailing and bailing. But the parabolic opportunities that present are going to build up. The larger opportunities will build up over 3 days. Asymmetrical risk reward, high of week, low of day, high of week, high of day, low of day, low of day, high of day, whatever that may be. It could be 5, 10 times reward to risk. If I'm on the inside, it's in an existing move. If I get into the market on the inside, it's in a market that's already about to go parabolic, completing from one level to the other level or through a level. On the backside of a move, first green day, first red day. Stop looking at a market that closes down and saying first red day, and a market that closes up is first green day. Understand the templates that you're in. Psychology. The psychology is this. You either know exactly what your edge is and you know how to execute it, and you understand that your edge is a high probability setup. It's not just getting into the market to catch a move. Where can I put size into this market? That's what I'm looking for when a market coils to explode, either with the trend or reversing the trend. What day is it? If it's Tuesday, maybe it's going to continue going. I'm not going to try and counter trend it. Maybe on a Friday, I'm going to get a counter trend trade, but it's in line with the larger time frame move. So traders are looking at the Fugazi and saying it's a trend. You're looking at the inside of a matrix, calling it a trend. We haven't even gotten to a level yet. It needs to go to a level in the timing window to offer me that opportunity. And if it's a day 3 and you're down low or up high on a Wednesday or Thursday, they may be jamming you in and getting you to chase poor quality wicks and price action in order to either bang you both ways and chew up your trading account or just get you trapped into a garbage market. So understand when you have a really clean, well-engineered chart and how you're going to execute it, if indeed it gets to those levels, how it should behave. Higher highs on the inside. On a day 2, maybe it's going to be a trend continuation. Day 1, day 2, day 3 might blow off in Asia for a parabolic move and a reversal in London. And then low-hanging fruit in the U.S. session. Day 1, day 2, day 3. Again, I repeat, I follow a basket of instruments so that I can just whip through them. I'm just looking for 1 or 2 great trades. It might be on an index. It might be on oil. Oil may offer a fantastic day 1 trade, and then the rest of the week may be difficult or not as easy or clean for easy free cash. But the S&P might offer that. The yen may offer that. If there's news on the calendar, step aside and wait. Wait for the news. Look for the easy money laying on the floor in the corner. You can mark off these levels at the beginning of a new month. You can mark off those levels at the beginning of a new week for the previous week. But each day, those levels are there for us to have. The market gives us those levels where they're going to be trading from. Open, high, low, and close. Very rarely will we see a gap between Monday and Friday. Most instances, the gap will be between Friday and Monday. Very rarely is there ever a gap. So in closing, traders, focus on specific parabolic opportunities. Day 1, day 2, day 3. Timings, levels, behavior of price. Keep everything simple, reproducible, and scalable in size. Make your trading a pursuit of pleasure. As Paul Tudor Jones says, the more complicated you make it, the less likely you will be able to reproduce your results, and the less likely you'll be able to scale it up in size. And I'm talking about real size. Have a great day, traders. 1% better every single day. Keep getting better. Master your craft. Master yourself. Master the setups. And may the markets go with you.